Welcome back to Smart Analyst Global. Just let me know if you can hear me. Let's give a feedback. Just type in the comment section. Or we're currently live on TikTok and YouTube. So we tested earlier and the audio was good, but I want to know if that is still the case. Please let me know. Just type it if you type in the comment section if you can hear me, and also you can drop your location where you're sending from, which country you're joining us from. Okay, I believe my audio is clear. Just let me know if that is still the case. Okay, we there. So today we're going to be talking about a very, very important topic, right? I was on TikTok earlier today, and no, I was on Facebook actually. I was on Facebook. Okay, alright, yeah. Somebody just sent me something. I'm going to correct that. Okay. I don't know. Is the audio good? I had to mute one of them. I think I'm taking into audio input, so I had to mute one. I believe the mic is good now. Please let me know if the mic is good. Thank you for the feedback. And there was an error in the speak message. I'm going to correct that right here. I think it should be there. Embedded message. Reply command. Okay, yeah. Corrected. Thank you so much for the feedback. I've seen that with the that's been saved, and you can see the update. Awesome. So we're back. Mike is reviving with some base. Okay, please let me know if that is the happening. I'm trying to reduce the base right now, so and we're currently in pro mode. Okay, pro mode is better. Voice over and noise cancellation. Please let me know if it's good now. Let me know, please. Get the feedback. I would really like to get a feedback before I continue, so that I will not just be speaking to myself. Still the same. That's strange. How now? You have some treble input. Okay. I don't know. Please let me know if the mic is better. I actually did not get this feedback when we tested earlier, but that's good. I don't want us to take too much time testing. So where are we? Is it good now? Is it better? Is it still the same? Can you hear me clearly? Let me join. You can also join us on Telegram, on TikTok actually. We have the TikTok link for those on TikTok. You can search for Crypto Smart Analyst on TikTok, and you can join us live on TikTok. So whatever we're talking about here, you can also have access to that on TikTok. So today we're going to be talking about risk management. Okay, I've had some classes about it before now, and today I just want to go into details about it, because I realized that a lot of people, okay, I watched the video on Facebook earlier today, and the guy they interviewed was actually talking about it's fair, yes, but is it loud? Please let me know if the mic is loud. Thank you. Let me know if the mic is loud. I'm actually getting on my own side is actually very clear, maybe because I'm using headset, but it's very clear. Okay, awesome. So the speaker was talking about, I've actually had this argument with a few of my friends. I have some of the OGs in the space about the difference between gambling, forex, and trade. Forex trading and crypto trading and gambling. Just like, no, it's all the same thing. It's gambling, it's trading is gambling. Yes. So we have traders that are gamblers. It is loud. Awesome. Thank you. We have traders that are gamblers, and if you don't understand risk management, you are automatically a gambler in trading. Okay. So most people actually fall into that cycle where they jump into trade. Even one of my students, I had to teach him risk management last week. Before, I was like, man, he's been doing it wrong. He's been getting liquidity and losing money too much. We had to jump on a call for about an hour, just about an hour, to guide him on how to manage his risk in trading. It's actually, I mean, everything was, it's a masterclass today anyway, so I had to just break that down. So if you don't understand the difference between just jumping into trade because you see the market move, or because you got a signal and jumping into it, and difference between jumping into it and also knowing when to jump. So it's not about you being a trader, it's about you trading profitably. It's about you taking the, know what to do. I remember when I was learning how to drive. It was one of my uncle that actually taught me how to drive. The first time I went to drive, I actually learned how to drive in a day because I've been studying. I learned how to drive in a day. Yeah, I remember him telling me that before you start the car, before you start the engine, the first thing to know is where you want to go. Are you going to the right, or you're going to the left, or you are reversing, or you're going forward? So you must know where you're going to before you even say you want to start the car. So the same thing applies to trading. You can't just because you have a fundamental information about a trade, that this trade is going to go bullish, and you put all your capital into it. That is gambling. That's a very silly way of trading. And you're not different from a gambler. You're not different from anybody from gamblers. Okay, so you really need to know the difference between trading and gambling for you to be able to know how to take advantage of the market, for you to be able to know when to buy, when to sell, how much of your capital to sell. So I always say, if you probably those have been following me over the years, for the past 10 years, you'll have known that I've been saying this. You only risk what you can afford to lose. Now the question is, what can you afford to lose? I was speaking with one of my students a few days ago, and he was saying he has a capital of $1,000, and in the next 1 month he wants to turn it into $5,000. And I'm like, are you serious? That is possible, but that is not. It is possible. Yes, you can. I've done that before. It's possible, but it will take a very high risk for you to be able to make it that way. And mostly, if you don't have what it takes to be a professional trader, you're going to end up losing a lot of that money, which is why we're actually going to be talking about risk man. Oh my God, I should be doing this live on my tab. I think doing this with my mouse, with mouse is actually not cool. So what I'm going to do is, what's the best thing to do? What's the best way to go? Okay, I think I didn't decide this well. So one of the things I want to talk about is how do we do this? Where's this now? Come out. Here. So let's do the texting. So we have risk management. And I always say something about the fact that what you risk is very, very important. So if you have $100, and I've been saying, when I emphasize about risking just between 1 to 2% of your capital, if you risk 1% of your capital, that basically means that you have the opportunity to take up to 100 trades. So if you risk 1%, basically means that you can take up to, let's say, 1% of $100. Basically means that you can take up to 100 trades. If you risk 2% of, say, your $100, basically means that you can take up to 200 trades. I'm actually, up to 50 trades. What am I saying? So if you're risking 2%, means that you can take up to 50 trades. You're risking, say 5%. You're risking 5% of your capital per trade, right? You're executing 5% of your capital per trade of $100. Basically means that you can only take 20 trades. So this is just like the fundamentals. So if you have $100, and I'm telling you should only risk 1% per trade. Basically means that if you have $100, you should only be risking. If you want to, let's say your exposure should be between $1 to $2 per trade. If you have $100, that is for you following a proper risk management strategy. That is you risking $1 to $2 per trade. And if you risk, okay, I already have a table for this. I think I did this on $1,000. So let me just put it on $1,000. I'm going to show you that table. Okay, so say you have, if you have up to, you have $1,000 and you're risking 1%, basically means that you can only risk $10 per trade. If you have $1,000 and you want to risk 2%, basically means that per trade, for you to be able to maximize your capital and be able to make good profit, there's something we call law of large numbers, right? Basically means that what's the probability that if you take up to 100 trades, you can win. If you take up to 100 trades, what's the probability that you can win half of it? What's the probability that you can win 20% of it? So that is basically what it comes. So, and if you're risking, and that will bring you to the, what's it called? The risk, the projection tool. Or we basically use every chart use this. This is the long position and short position, right? So say I'm long in this position. This is still, by the way, giving you instant alert, right? So this is this is the projection tool. And I'm going to be breaking this down on the best way to use it, right? So this is a projection tool, and this is for long position. What the yellow part, right? You may be seeing it as orange. It's actually orange here on my own side. I don't know what your color is going to be showing. The orange part here is the risk that is between your entry price. This is your entry price, and this region is your. Let me just think. There's an annotation I can use, right? Yeah. So this region is this region from here is your entry price, and from here is your stop loss, while this is your target, right? So I'm targeting, say, 1.5, right? So we've been talking about risk reward ratio in trading, so it's very, very important. Risk reward ratio basically, when we're talking about risk reward ratio, risk basically means that what you can afford to lose. And what am I risking? That means let's say I'm risking 2%. My risk is going to be 2% of my capital. How do you calculate that? 2% of $1,000 is what, $20, right? So if you're going to be placing a trade, that means that your entry, you're putting your asset here, you're putting your entry here, and the only cost, the cost, people always talk about margin price, your leverage 2x, 3x, 100x. I always tell you, your leverage doesn't really matter. What matters is the cost of that leverage. You can leverage anything, but if the cost is high, if I have 50x leverage and my cost is and I have $1,000 capital and I have 50x leverage. Okay, if I have $1,000 capital and I used 50x leverage and the cost of that leverage is $50, that means I am risking what? I'm not risking 2%. But if the cost of that if the cost of that leverage is $500, that is basically means no matter the leverage, I'm risking 50% of my capital. If the cost of that leverage is $20, that means I'm risking just 20% of my capital. So when you get an entry, right, you get an entry around this region, and you place what you're risking from here. So from here to here, that is, if I place my entry here, and the market end up not going up and coming from here and hit my stop loss here, what I'm going to be, no matter what I put into it, what I'm going to be risking, what I'm going to be losing is just $20. Now, I'm going to take that to chart and how it relates. I think we're going to be okay here. We can probably just let me enable paper trading on TradingView. So I've been saying this before, that if you want to trade, right? If you want to learn how to trade, you don't even need capital, right? So you really don't need capital to learn how to trade. If you have a TradingView account, you can easily just do a free trading and learn how to do that. Okay, you can learn how to trade just by using TradingView. It is that easy. So one of the things we're going to be doing some live trades, just paper trading, just for you to know how to use these things. I'm not using a live account. Okay, so on this paper trade, that's going to help me to explain what I mean by if you place an entry and the market hits. So okay, we're going to use an example from from stick, from what stick is saying, right? So this is stick. Stick is actually stands for Smart Trading and Investment Companion. It is a trading indicator that gives you insight on where to buy and where to sell, where to hit your stop loss, where to put your stop loss and when to sell. So if you're looking at stick right now, you can see buy sentiment. The first, mostly you want to take the first buy sentiment after the entries, right? So you have sentiment. Stick is giving you entry one. So you have entry one and stop loss of that entry one. So stick is saying enter at 177. Okay, and stop loss should be at what, 175 thereabout, right? So stick is saying my stop loss should be here, my entry should be here, and let me shift this. And my target, I'm targeting what to, let's say I'm targeting 1.5 RR. 1.5 RR means 1.5 risk reward ratio. And what 1.5 RR also stands for is 150% of my risk. At the beginning of the year, I made a video about making how much you can make in a trade. Saying you can actually make up to 150% in a trade, and some people like, is it possible or something like that. So when I say 1 RR, that's basically 1:1. 1:1 is also equivalent to 1 RR, which is also equivalent to you breaking even. That is basically 100%. So you get back 100% of your capital. Then 1:5 stands for 1.5 RR, which is equivalent to 150% of your risk. So let me just put it here, risk. Then we have 2 RR. So you can even have 1.5 to 1.2. Sorry, let me just do this. 1 point. What am I doing? So it's going to be 2.0. What am I saying? 2:0. That's about, yeah. Half 1.5, yeah, 2.0, yeah, thereabout. Yeah, still correct, still the same thing. So 2 RR basically we're giving you about 200%. So we have 3 RR. Yeah, 3 RR basically means that you're getting 300% of, not of your capital, 300% of your risk, what you risk, not the capital. Remember, what the capital I have is $1,000. What I'm risking is, so if I'm risking 2%, if I'm risking 20% here, that basically means I'm risking $20. Okay, if I'm risking this, it means $10. So basically using dollars as a base value, right? And here I'm risking $50, right? So this is my risk. I'm risking, these are the risks, this is percentage. So when I say 300%, it basically means 300% of your risk, of your capital. Sorry, 300% of your 300% of your risk. So if you're risking in this scenario, right, you're risking $20. 200% of $20 is equal to what? Well, $20, and 200% of $20 we times that's 2x. That's $40. So 200% of $20 will give you $40. Times 2 RR, right? So that's basically what's going to give you. So if you're risking, what you're risking here from here, basically you are going to be buying position size that it is not more than, the cost is 200%. Sorry, the cost is 20% of your capital. So here, when you get an entry here, you got the entry price, you get the position price. So before I go deeply into execution trade, I'm going to give you a detail on how you can actually set this up in on your chart. So okay, getting some feedback on the process. Okay. Good. I hope everybody is learning something. I hope you're very clear. I hope I'm not too fast. Please let me know. I hope I'm not too fast. And if you need the background music, probably I should play some. But I hope I'm not too fast, right? So this is actually more or less a masterclass course. So for those that understand the value, you understand what I'm talking about, right? So I'm going to the settings of this projection tool, right? So my capital here is $250,000. Okay, let me look at the capital. I think I've tested this capital. I've grown it to 100. And my current capital, you can see account balance is 132. So let's just say the capital I'm putting into consideration right now is 132K, right? $132,000. That is the capital in USD. So I'm setting up my projection to in USD. So what is my lot size? Basically 1. I just put it to 1. That's basic. Then what is my risk? That is, I'm risking. Looking at here, what I have here, say my risk is what? 2% of my capital, and is in percentage. You can also have it in USD. You can type it in USD, but I prefer it in percentage. So if you ask my risk here, and from here you can see what my entry price is, 177. Okay, based on what stick token, which is what I just dragged here. What I dragged here is basically what is showing there. My stop loss, where I put my stop loss here, you can see the stop loss here. This is 175.16. That is what you're seeing here as well, 175.16. Then the price here, that's my TP is 181. That's why I drag it. I think it's currently 2 points. You can see risk to reward ratio here. If you can zoom in a bit, risk to reward ratio here is 2.27. Like I'm going to drag it back to 1.5 anyway. So you can easily adjust it here to say, if I change this number to 180, you'll see that my risk reward ratio will jump down. It has dropped to 1.73. Okay, so at basically what this basically means is that what I'm risking here and what are going to be getting. So if you look at what I have here right now, 132K, that's the capital. Okay, so I'm going to be placing a trade here. Let me use this to place a trade. Let's buy $1,000 at a, yeah. So I'm going to be buying $1,000 position. No, not 1,000. I'm buying long, and what is this projection telling me? It's telling me I need for 2% of my capital is one. I'll be buying a quantity of Solana 400 plus Solana for me to be able to hit that target. That's going to be 2% of my capital, 1,411. So let me edit that. So I'm buying 1,411. That's my price. I want to set my TP. Set take profit. My take profit is at 180. So come on. I didn't set. Okay, the trade executed. So okay, so I'm just going to drag this to explain that. I'm trying to open another entry 2, right? I'm going to drag it to explain it. So I'm not going to be buying because my capital here. So if I have entry 1 here and I have entry, so if I want to have my entry into 2 right now, that's what I'm trying to do. I'm having 2 entries. This is my stop loss. I'm having 2 entries. So if I want to add it into 2, buying the same amount, 1,001. So it's bring my entry down to this region 176 by the time if it come back to each entry 1. So just leave it at 1,001. So my TP currently is going to be at 180, right? But let's just put it at 179. TP is at 179, and my stop loss is at. I'm just setting this. You can easily drag it on the chart as well. It's 175.1. So this is my stop loss, and you can see the leverage. The leverage I'm using here, you can see the leverage. Leverage is 500x. Leverage I'm using 500x. Like I said, it doesn't matter. What matters is the cost. Your leverage doesn't matter. What matters is your cost. 500x is what I'm using here, and doesn't matter. Like I said, it's my cost that really matters. Look at the trade summary. You have the risk. Which is current exposure is like 0.75, and modified trade, and that's it. So basically, this is the stop loss. This is the stop loss, and this is the target. The trade is currently $275 up. Okay, this is the target, And what I did right now, I already set my entry and my stop loss. So what happened here, right, is that if the market goes and hits my stop loss, 100 and what's that? 2% of 132k times 0.2. That's 2000. So if the market come back and hit my stop loss, I'm going to be losing 200, and you can see I'm going to be losing about $2,000. But if it goes ahead and hits my TP, so if I'm targeting 1.5 R, this is 1.7. If I'm targeting 1.5 R, which is what we're seeing here right now, I'm going to be making that'll be 2005. Yes, I should be making that'll be 3000. 1 RR. Where is it? What am I doing? That's not what I wanted to drag. Sorry, I wanted to drag the position to. Yeah, this is what I want to drag. Come on, Ctrl Z. Tip. So if I'm targeting 1R, 1.5, right? You see what I'm doing right now. You're looking at the risk reward ratio. You can see it's changing to. It's currently 1.53. So at 1.53, if I drag the TP right now, you can see that the TP here. Sorry, not that one. The TP here, if I drag it to this TP, it's going to be giving me about $3,000 in profits, right? So basically, that is risking. So what I'm risking here is just $2,000. What I'm risking here is $2,000, which is if it comes back to hit my stop loss, I'm only going to be losing $2,000. And if it hits my TP, I'm going to be making $3,000. And that is at 1.5 RR. That is 150% of my risk. 150% ROI. Basically, that's it. And if I say I want to drag it to 2x, come on, why are you dragging that? That's not what I want to drag. So if I want to put it to 2x, so you can see, I mostly call it 2x instead of calling it 2RR, so don't mind me. So I'm dragging it to 2RR right now. So yeah, that's 2. So you can see at 2RR, I'm going to be getting $4,000. 4,000 plus, yeah, about $4,000. And if it hits my stop loss, I'm losing $2,000. That's just how to risk. So basically, the capital I have is this. Like I said, this is just a paper trade. So don't start. Nobody can come to my house looking for money. I beg. So this is just a paper trade, right? So the capital I have right now, actually, the capital I have from about is just $100,000. I've been able to trade it to $132,000 just for testing anyway. So the capital I have right now is 132k plus, and I'm rating 2% of that. And with that, I'm making if the market hit my stop loss, it didn't go according to plan, I'm losing $2,000. If it actually is my target, let's say 2RR, I'm going to be making about $4,000. So that is basically how to risk. So you don't over risk. And one of the mistakes people make in trading is, I did that last year. I made a mistake. I made that first big mistake last year. I was in a trade and the market was dumping, and I was like, normally I would have closed that trade and just lose that $2,000. But I ended up adjusting the trade and I lost $10,000 in a day. It was very, very painful because if I just left my stop loss where it is, I'll just lose $2,000 and I'll be able to calm down and follow the trade again. But I adjusted my stop loss downward and the market later came down and hit my stop loss. That happened within 1 hour. It was very, very painful. And one of the mistakes traders make is because and that's more or less me driving sentiment and emotions into my trading. Even though I'm a professional trader, I still make that mistake. So you want to take emotions out of the game, and the only way you can take emotion after your trading is if you understand what you're doing. Most people just like, okay, they just put isolation. I've seen guys that they trade on isolation margin. They put it in isolation and they put on what I want to risk right now is, so they put $1,000 in isolation, and I say that is what they want to risk, and they now take 50% of that $1,000 is what they used to place a trade at the time. That is really risking 50% of your capital at a time. Basically means that you cannot take more. You only have ability to take 2 trades before you lose all your money. Some people even makes up to 75% of that capital. It's actually very, very wrong mode when you're trading. So you need to understand you need to know what you have. You need to know the direction of the market, and that which is what Stick helps you with. And one of the advantage of Stick is mostly sometimes, not all the time. Sometimes before the market will hit your stop loss, it will have, and the market flips before you hit your stop loss. Like I think today has been a very choppy day, so most today's trade has not been. I've not really made some money today, just a little more loss today. So, and Yesterday was much better. Yeah, we had good movement yesterday. Even the first day was good. So we had a short. So this was okay. Yeah, the first day we had a short. We took the first short. We took the long. We bought here. We sold here. So we sold here. We short here. We sold here. So we bought here. We sold again. And before the market now came down, and we were able to close here before today's trade, and it's very, very choppy. So today is actually here to have a very amazing breakout, just minor profits, losses, and one full loss. I think we have one full loss, one partial loss, and one partial win as well. The one full loss. So we are here to have a full win today, and that full win is enough to recover whatever you've lost. Now, why did I say the full win is enough to recover whatever you lost? Looking at the week, so let's go back to my chart. I'm going to go to this table, right? So yeah, this is a very, very this is an ideal state, okay? So this is an ideal state. And in an ideal state basically means that there's no loss. So and that's not possible. This is just an example. So in an ideal state, say this is a projection of 30 days, of a month. So from 1 to 31, yeah, thereabout in 30 days. If you have a capital of come in. This way I don't want to go into my I don't want to go into assets we're buying anyway, but let's just say this. So if you have a capital of $1,000 and you're risking 2% of your capital, you're risking 2% of your capital. This is the risk. You can see risk is $20. You're risking 2% of that capital, that's $20. Your profit of the first trade is $1,000. So your profit on the first trade is $40, is more or less $40. Okay, you have $1,000. You risk 2%. That's $20. Your profit, if you're using 2RR, from what I just explained, using 2RR, your profit is $1,040. So you have that now. Your new capital is now $1,040. You risk 2% of that. That's $20.80. Your new profit is going to be what? $1,081. So if you do that, you just keep compounding your trade. At the end of the month, this is the purple line you're seeing. At the end of the month, your capital is going to be at what? Note, this is an ideal state. You're not losing anything. So, and if you have $1,000 capital at the end of the month, you will have 3x of capital if you're risking just 2% of the capital. So let's say in an ideal state, you're making 324% of your capital in an ideal state, no loss. So let's say the law of large number with all the trades you're taking one trade per day, and you have 50 win. If you had 50 win and 50 losses, if you have 50 win and 50 losses, at the end of the day, you'll be making your capital should be, your profit, your ROI should be around 150 to close to about 150 to 160% at the end of the month in an ideal state. That is if you stick to the rule. Actually, it's very, very hard to stick to the rule. Just so you know. It's very, very hard to stick to the rule. That is how to do it. So this is an ideal state again. Say you're risking 1%. This is scenario 2. This is scenario 1. This is scenario 2. Scenario 2, you have $1,000. You're risking 1% of $1,000. That is $10 per trade. At the end of the first trade, you're making $20 profit. Second trade, you're making $40 profit. Third trade, you're making $61 profit. At the end of the month, in an ideal state, no loss. Like I said, it's an ideal state. It might not. It's very, very hard for you to get it, but it's possible also. In an ideal state, at the end of the month, if you're risking 1%, you're going to be making 180% in an ideal state. 180% profit at the end of the month. So, say law of large numbers. Even if with the law of large number, if you lose 60% and you win 40% at the end of the month, you're still in profit at the end of the month. In an ideal, let's say in a normal scenario, you have up to 30 trades in a day. You have 30 trades in a month, and you lose 60%. You lose 60%, and you won 40%. At the end of the month, you're still in profit. That's just so. If your target is 2x, if your profit target is 2x of your capital of your risk. Sorry. So this is that is for 2RR. And this one is for $500. So if you have $500 capital, at the end of the month, you should be having $1,200 thereabout. That's 242% ROI at the end of the month. The same thing goes for $500 if you're risking 1%. At the end of the month, you're going to be having 156% in an ideal state. So understanding this is actually crucial for every trader to know how to risk, how to, if you understand that this is, because trading is all about making profit and growing your capital gradually. You grow your capital gradually, you make the profit, you grow it. I said this in one of my lives. I did this back in 2021. That's the last bull run. Anyway, it was in the last bull run. It was very easy. So in the last bull run, I funded an account. I created a sub account. I funded an account and I traded $200. I was able to grow $200 to about $15,000. I think, yeah, about $15,000 within 2 months. And basically, how was I doing it? I was taking multiple trades in a day, and I was just accumulating. So that these trades, I see $20, I had it up, $100, I added up, $1,000, I added up. I just keep adding up like that. Before you know it, I was able to grow $200 to $15,000 within a month. And one of the mistakes I made, because this is a red flag, I lost that money every time. I lost everything because I got this euphoria and I was just over trading. I was opening up to 15 trades in a day at a go. So it was that bad. Not even 15 trades, not 15 trades of a single asset, 15 trades of multiple assets. So you see times I have up to 20 trades, 20 assets, different asset trading. And when you have multiple assets like that, it is very, very difficult for you to say you want to close all of them at once. Now Binance added a new feature where you can easily close all trade at once. I did not take advantage of that then. I don't think it was even available then. It wasn't available then. Now you can close all trade at once. So you want to ensure that you are not over risking. Even if I'm taking multiple trades, I want to ensure that the cumulative of all the trades I'm taking is no more than 2% of my capital. And like I just showed you an example of if you're risking just 2% of your capital, you can actually make 3x of your capital at the end of the month if you're just risking 2%. But one of the mistakes most traders make is they want to gamble in and make all the money at once. And if you want to make all the money at once, you eventually mostly will lose it. And that's why I always say, if you want to trade, the first question I ask you is, how much can you afford to lose? And that is what, when I say how much can you afford to lose, the amount you can afford to lose is not your capital. The amount you can afford to lose, yeah, the amount you can afford to is kind of your capital though, but amount you can afford to lose is the capital. The amount you can afford to lose per trade is 2% of that capital. So that gives you leverage to know how much you can actually trade and how much profit you can make at the end of the day. So this, funny enough, this strategy I just taught you guys, right, applies to those that gamble too. You're probably doing sporting. I don't know. I actually intentionally went into sport betting to see how it works for me to actually, because I had, like I said, I had an argument where people were like saying sport trading is the same thing as crypto trading or forex trading, and I had to argue that it's different. And the reason why it's different is because of the data. And people are like, yeah, there's data in sports, the blah 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 like that. No, there's data in sport. There's data in sport, but you cannot the data in sport can be easily manipulated, compared to crypto trading. And you actually have what we call mitigative position, where you can probably put a stop loss or protect your profits. You can hardly do that in most sports betting and all this gambling. No. So trading actually gives you data, give you analysis where you can actually do your technical analysis, where you can do projective too. Like Steve right now is leveraging on information. It's looking at all the sentiment, information, and data in the market to be able to predict your entry. So Stick is basically doing analysis on about 7 different time frames for you to get this entry alert. It's an analysis that has been done on about 7 different time frames for you to get this buy sentiment alert. It's a multi-level analytic tool that's actually done. That's basically what I built into it. So understanding that will actually help you know if you have any, help you know when to trade, what to buy, when to buy, and how much to buy. This is very, very crucial. Most people actually trade and they just put in any amount without knowing, without proper analysis. So this is very, very important for you to be a profitable trader. And for even when and if you notice, whenever you Stick, I always say apply proper risk management strategy. Because you can be getting entries and you don't apply proper risk management strategy, you might still end up losing your capital. Anyway, I think I'm going to send a picture of probably the outcome of this trade to the community. If you can join our Telegram community to get questions or get insight. If you have any question about the trade, about not just trading, about the blockchain space, about the crypto space, about the forex space, we have professionals in the community that can guide you about, give you insight about trading. And if you want to have in-depth knowledge, you can subscribe to our masterclass. It's not compulsory, sincerely. You can subscribe to our masterclass, and you can get is a one-time payment, lifetime access masterclass where you actually get in depth about trading, everything you need to know about. You get in depth that is grounded enough for you to say you want to build your own indicator. Actually, that's just the way it works. So, if you want to get access to Stick, that's the indicator here. That's the indicator that's going to be plotting these entries. If you want to get access to, it's quite easy. So, and once you sign up, just ensure you sign up with your TradingView username, and that is how we can get to automate your access to the tool. You can get access to it and use it for the next 7 days. So it's free. You can get free access to use it for 7 days. And if you enjoy it, you can now subscribe to it optionally. It's up to you. So basically, that's just the fundamental on risk management. There are still other in-depth information about risks, but like I said, it's risk management 101. But this is like the basic. If you know this, you're good. You are actually good to be a trader on your own. Knowing this is enough for you. So I don't know if you have any questions. If you have anybody that have questions, please drop it in the comment section, or just drop it in our community, Telegram community or WhatsApp community. Okay, good. If you have any question, please feel free to drop. If you want, like we do live analysis, if you want me to analyze for you or probably analyze any asset for you, please comment it as well. We are also going to be doing that live analysis going forward. And if you have any assets, you probably are trapped in a trade or something, and you want insights on how to trade. Okay, if you're trapped in a trade and you want insight on how to trade or something like that, you can easily reach out to me. I'll give you free access. I'll give you a few insights on how to get out of your trade. It's that there's no big deal about that. It's free. Anyway, so the goal is for everybody to be profitable. So as long as you're profitable, that is when we have a good, bigger and greater community. So join the Crypto Analyst community on Telegram, and you can also follow us on Twitter. We are on Twitter. We are not very active on Instagram, but yeah, we are mostly active on Twitter and Telegram. Not really active on Facebook as well. So, but Telegram and Twitter, yeah, we're kind of active on both communities. So join us on Telegram, join us on Twitter, and let's talk. And like I said, to get access to the tool, go to cryptoanalyst.com, create your free account, ensure you're using your TradingView username as your username, so that will allow us to give access to the username you give, because that's basically what you get access to straight away. So that is it. Any question, drop it in our Telegram community or drop it under this video, and it's going to be responded to. See you next time, and I think we probably should be doing this every week. So I'll look into that. If I have the time, yeah, we'll do this we might be doing this every day, or probably twice a month or something, right? Just to be consistent. Yeah. And if you have, like I said, see you next time, and don't forget to trade smartly. Don't forget to trade smartly.